Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us on this really snowy day here in Central Oregon. So we sit here, it's November 1st, and we just had the best October for markets, for the Dow specifically, since 1976. The Dow was up 14% in the month of October. The S&P was up about 8%, and the NASDAQ up about 4%. So you say to yourself, why did the Dow outperform the NASDAQ by about 10% in a single month? And that's because, well, there's only 30 stocks in the Dow. We never really talk about the Dow because it's only 30 stocks. But it's generally full of what we'd call considered old line value stocks, and the NASDAQ is full of technology stocks. And we saw a huge outperformance on value stocks over growth stocks in the month of October. And we expect that to absolutely continue going forward, and Josh can talk about why that is. But this playbook and this market is playing out very similarly to the market we saw in the late 90s, early 2000s. Remember, tech telecom media stocks really ripped in the late 90s and traded up crazy valuations. And then in March of 2020, the Federal Reserve had raised rates 6 times, and then the market finally rolled over. NASDAQ went down 82% between 2000 and 2002, but value indexes and a diversified portfolio did reasonably well during that period, especially on a relative basis. And we believe the same things are playing out now, right? We had extreme overvaluation in the market, especially in technology companies. The Fed is raising interest rates, and we're seeing a rollover and a shift to value companies that you all know and like and use almost every single day. And Josh can talk about why we continue to believe that the value trade is going to work going forward.
Value has had 9 months in the sun, at least on a relative basis. In October, the value indices, small value was up about 13%, large cap value up 12%, so doubling the S&P. NASDAQ was only up 3%. So the big dichotomy between the rally that we saw in October versus what we saw over the summer was growth stocks were actually leading the way to the upside during the summer in that July-August rip-roaring rally. Growth led the way. The really positive thing that we saw, especially this last week, is even in the wake of really disappointing big tech earnings, Amazon and Facebook both having hundreds of billions of dollars lopped off the market cap, stock indices still went higher. And as Tyler mentioned, that's just a repeat of the performance in the wake of the tech telecom media bubble. But importantly, low interest rates were bad for value stocks, specifically banks, because it's very difficult for banks to make money off of the spread, that net interest margin when rates are very low. That dynamic has fundamentally changed, but also a lot of the old economy businesses, whether it's the transports, the industrials, so many of those companies, when money was cheap, they go out and add excess capacity, whether it's in the mine or in the oil patch or really any different version of that. Low rates created spare capacity, which depressed margins. The opposite is true now. And, of course, you've seen sort of a reversal in the growth names. When growth stops and those stocks are priced for perfection, look out below. And that's what you've seen the last couple weeks.
So, we definitely don't think, the Fed is going to announce their decision on interest rates tomorrow, and then we get the inflation report at the end of the week. So we don't think the volatility, especially to the downside, is over. Expect more volatility. It's going to be questionable whether or not we can stay out of a recession or a more meaningful recession in 2023. And so we don't think the volatility is over. It was great to see the returns we saw in October, but expect more volatility through year end. As always, if you have questions about your situation, your portfolio, anything you want to talk about, call the office. The number here is 800-743-0988, or you can send either one of us an email, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in 2 weeks.